This portfolio of just 8 stocks is probably the most expensive in the world. Dev Kantesaria owns 8 stocks in his Valley Forge capital management portfolio worth $3.5 billion. In this video, we're covering all of his biggest positions, starting with the smallest and most recent holding, number 8, ASML. ASML is the world's leader in lithography systems used in the manufacturing process for semiconductors. It produces school bus-sized machines worth $300 million to the top semiconductor chip clients in the world, including TSMC, Samsung, and Intel. The technology work done by ASML is close to magic. It's been fantastic in its last decade, more than 10xing its stock price in this time alone. But right now, the company trades at nearly 47 times earnings and 13 times their price to sales ratio. It's hard to make high returns coming off of that lofty base. ASML makes up 1.35% of Kantesaria's portfolio worth $47 million. Today, the business is a $348 billion market cap that trades just $100 below its 52-week high. That sounds like it's off a lot, but keep in mind this is still up more than $340 from its 52-week low. 4 other super investors own ASML, and this is led by Stephen Mandel of Lone Pine Capital, who has 2.81% of his portfolio in the business and added in the most recent quarter. Valley Forge first bought this business in the second quarter of 2023 and hasn't added since then. Even with these high valuations, ASML still returns a small amount of capital to shareholders. With $7.49 of annual dividends and small share buybacks, right now ASML pays a modest 1.1% shareholder yield. ASML's valuations compared to most standards look pretty stretched. They're well out ahead of these. Still, the company looks pretty close to its GF value, which today is $60 below its current stock price. Analysts only want to see the stock go up, targeting $1,026 as their price target. Valley Forge buys industry-leading high-quality stocks that are quote-unquote compounding machines. But with this high quality have come some very high valuations that have led to this being the most expensive super investor portfolio that I've seen. Still, Kantesaria is solidly a GARP investor, or growth at a reasonable price, and this is nothing against him. He's beat the market for his clients, and you can't complain about that. He just owns some very expensive stocks, and just how much that outperformance can continue is another story altogether. Enjoy this video as we uncover what buy and sell moves he's been making in his portfolio. Remember, this video is not financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. Now, on to number 7, Aspen Technology. Aspen Technology is a 1.85% position worth $65 million in the Valley Forge capital management portfolio. The company is a global leader in asset optimization software for capital-intensive companies. In 2021, they did a deal with Emerson Electric that involved trading cash and some of Emerson's operating businesses to acquire 55% of their shares. Combined, the new company has over 3,000 customers in a variety of industries across more than 40 countries. Aspen's valuations may be a little more tame than some of the other companies we're looking at, but still they trade for 44 times their free cash flow, and the business is trading at an 11 times price to sales multiple. Today, Aspen Technology is a $12.8 billion business that trades pretty much smack dab in the middle of their 52-week range. Aspen's owned by 3 super investors overall, and Dev Kantesaria has the biggest position. The company has started to buy back some shares, and with a slight dividend yield, they have a modest 1.7% shareholder yield today. Even at today's valuations, the company looks like it's trading in much better shape than how it did compared to its past. If they can keep growing at historical rates, they may look attractive compared to their free cash flows. That's why, despite these high multiples, a GF value says the company may be undervalued by as much as 23%. Aspen's been in the Valley Forge portfolio going back before 2019. Over this time, the company did sell out completely in the second quarter of 2021 before re-entering the business in the first quarter of 2022. Since their most recent buys, the company's shares are up by about $30. Visa is next on our list at number 6, making up 6.75% of the portfolio worth $237 million. Visa is the $500 billion largest payment processor in the world. In 2023, they processed more than $14 trillion in payment volume. Visa operates in nearly every country worldwide and processes 65,000 transactions per second. The company today trades $17 off of its 52-week highs, and it's up more than $50 from its 52-week lows. Visa is a favorite among super investors, with it being the fourth most owned super investor stock. 24 different super investors own positions in the company, and this is led by Chris Hone from TCI Fund Management. Visa is also a large position from Chuck Ockrey and Terry Smith, who's been called the British Warren Buffett. Interestingly, it's in Warren Buffett's portfolio as well. Most likely it was Todd Combs who bought into this company, as well as MasterCard. While there's no doubt that Visa is a great business, today they're trading at 31 times earnings and 16.5 times sales. Those again are some pretty lofty multiples. As we look at the standard methods of valuing the company, it looks like they're out ahead of most of these, unless they're able to keep up their free cash flow growth at historical levels. Somewhat surprisingly, Visa does return a decent amount of capital to shareholders. Visa buys back a solid amount of shares, and they're also a dividend growth stock. They grew their most recent dividend payments by 16.52%, and they've grown these in each of the last 16 years. All of this adds up to a pretty decent 3.1% shareholder yield. Valley Forge has owned Visa for a long time in their portfolio, going back before 2019. Visa was the only company that they added to at the end of 2023. Analysts want to see Visa trade even higher, targeting $314.50 as their price target. Cracking the top 5, we have Intuit, which makes up 7.9% of the portfolio with a holding that's worth $278 million. Intuit is the $172 billion software giant behind products such as TurboTax, QuickBooks, and the recently acquired MailChimp. Today, they trade $30 below their 52-week high, and they're up more than $230 from their 52-week lows. Intuit's been a long-time holding that's more than tripled since Valley Forge has held the business. They most recently added a decent amount in the first quarter of 2023, and that alone is up more than $200 a share. In total, 8 super investors own Intuit, and this is led by Dennis Hong and Linzel Train. What another surprise, we see sky-high valuations again, with Intuit trading at 65 times earnings and nearly 12 times sales. These types of high valuations are going to be a huge future headwind for nearly all of these businesses. Intuit is well out ahead of most standard ways of valuing the company. Even as it's outpaced its fundamentals, analysts are still looking at a $725.50 price target, implying around a 14% upside. At number 4, we have Moody's. It's a $476 million position that makes up 13.52% of the portfolio. Moody's is the U.S. credit rating agency that operates in an oligopoly with S&P Ratings and Fitch. Historically, it's been one of the strongest businesses in America, and it's worth $69 billion today. While it trades $18 below its 52-week high, it's up more than $86 from its 52-week lows. Moody's is still very expensive. While it's a very high quality and durable business, it's trading at 43 times earnings, and right now it trades for 11.5 times sales. It's going to be tough for the business to keep up any level of durable growth that makes these valuations warranted. Today, 14 super investors own Moody's, and this is led by Chuck Ockrey, who views it as one of his core positions. It's one of his classic three-legged stool businesses that earns high returns on capital, has a long growth runway, and has good capital allocators. Moody's is also a top 10 position for Warren Buffett, and he bought it back when it was spun off from its parent company, Dun & Bradstreet. Valley Forge has owned Moody's for a long time, and it's added to it repeatedly. Like these other companies, Moody's looks expensive compared to standard valuations. It's well out ahead of any of these, and it's way ahead of where it's traded in its past. But just like Visa, Moody's is a dividend growth stock. They've grown their dividends for 14 years straight, growing it by 10.2% in the most recent year alone. With the 0.87% dividend yield and slight share buyback, today Moody's offers a 1.25% shareholder yield. And even with lofty valuations, analysts still want to see Moody's price go higher. At number 3, it's the other payment processing giant. We have MasterCard. It's a $633 million holding that makes up 18% of the Valley Forge Capital Management portfolio. MasterCard has a $407 billion market cap, and it's trading $35 below its 52-week highs. Right now, MasterCard is trading for 36 times earnings and 16.5 times price to sales. It's again a very high quality business that's expensive. This seems to be supported by the company's valuations, where it looks like it's way out ahead of its ability to produce earnings or free cash flows. MasterCard is yet another dividend growth stock on our list. They grew their dividends by 16.04% in the most recent year, and they've grown their dividends each year for the last 12 years. Couple this with their share buybacks, and today they're paying a 2.78% shareholder yield. That's not too shabby. In total, 17 super investors own MasterCard, and this is the 8th most owned super investor stock. Valley Forge is the second second biggest owner, just behind Chuck Akre again. Also on this list, we have a few Warren Buffett followers, including Guy Spear, Thomas Russo, and Wally Weitz, who's on the Berkshire Hathaway board of directors. Berkshire also owns MasterCard, and they've done so since the first quarter of 2011. Most likely, this was also a position from Todd Combs. Like these other businesses, Valley Forge has owned MasterCard for more than half a decade, although unlike these companies, they've been trimming slightly in 2023. They very slightly reduced their ownership by the end of the year. Moody's counterpart, S&P Global, is next on our list, and it's the second biggest position in Valley Forge's portfolio. This holding is valued at $729 million, and it makes up 20.73% of the portfolio. That's the biggest percentage holding from any other super investor. In second place, we have Chris Hone, who also has some portfolio overlap here. Valley Forge has also owned S&P Global for more than half a decade. They've added repeatedly to this business as well, most recently in the second quarter of 2023 and a huge add in the first quarter of 2021. Today, this credit rating giant is a $139 billion business that's trading $24 below its 52-week highs. This shouldn't surprise you, but it's also very expensive. It's trading for 48 times its earnings and nearly 10.5 times its price to sales. Compared to their historical growth and where they've traded in the past, they're not trading that far out ahead of these valuations, but they're still stretched. A big reason why they've almost always had high multiples is because S&P is a dividend king. They've grown their dividends in each of the last 51 years, yet still today they pay a modest 0.85% dividend yield. The company, though, is buying back a lot of shares, and because of this, they have a decent 3.37% shareholder yield overall. And as with their other businesses, it's no surprise, but analysts want to see S&P Global trade even higher, targeting $472.50 as their target. Can you guess what's on our list at number 1? It's a business that's a top performer since the global financial crisis, and it makes up an insane 29.89% of the portfolio. With a holding worth more than $1 billion of this $3.5 billion portfolio, we have Fair Isaac, or FICO. FICO is the credit score standard in the United States. As a consumer, you need a good one to qualify for most loans. Since its lows during the global financial crisis, FICO is up nearly 80 times. In the last decade alone, their stock has increased by more than 20 times. With huge valuations, Fair Isaac trades for a market cap of $29 billion, and it's down $100 from its 52-week high. This is still up more than $500 from its 52-week lows. How, you might ask? Well, this comes by probably being the most overvalued stock we've looked at on our list. FICO trades at nearly 20 times sales, and they're trading for 65 times earnings. Again, FICO is an insanely high-quality business that's basically a standard in the financial industry. Yet valuations still matter, and this looks high by nearly any stretch of the imagination. This is why a GF value says that FICO is significantly overvalued, with a fair value of just $740 per share. Dev Kantesaria is the biggest owner in FICO by far, but it's also a huge position from Lindsell Train, who has 13.66% of his portfolio in the company. Interestingly, of the 3 super investors who own the business, all 3 of them trimmed in the fourth quarter of 2023. And since that time, guess what? The company has traded even higher. Valley Forge likely saw a huge influx of investor money in the first quarter of 2021 as they added significantly to their top 5 holdings. Today, FICO doesn't pay dividends, but they have in their past, and instead they're choosing to buy back shares. Just like when you're investing in a company, when you're buying back shares, valuations still matter. And because of this, it's likely they're destroying shareholder value in the long run. While the company is trading for these high valuations, analysts want to see it trade even higher. They have a price target of $1,450 per share. Now again, I want to underscore that Dev Kantesaria is a high quality investor. He's beat the market for his clients by owning these high quality businesses. But that still doesn't hide the fact that, as we've seen, they're all trading for sky high valuations. It's likely if he hangs on to these companies, he'll perform a lot worse in the future than he has in the past. Even if it's wonderful, no company is worth an infinite amount of money. What company do you think is most overvalued, and what surprised you most about looking at Valley Forge Capital Management? Let me know in the comments below. If you want to learn about more opportunities in the stock market, watch the next video and sign up for our investing tools to make requests, track more than 67 stocks, and get exclusive bonus coverage.